Welcome back to Griffonomics. It is great to have you with us. Today, we are going to do something a little different. Usually when we talk about energy or, we talk about high-growth stocks, everyone wants to talk about the same three things.
Oh, yeah.
They want to talk about batteries, they want to talk about solar, or they want to talk about the data centers powering AI.
Which are all valid topics, sure. I mean, they are the shiny objects of the market right now.
Exactly. They are the shiny objects. But today, we are going to ignore the shiny objects. We're going to look at something that, on the surface, appears to be the most boring, bureaucratic, old-world industry you could possibly imagine.
Right.
We are going to talk about a utility supplier.
And not just any utility supplier.
Right.
A utility supplier that, until recently, most people thought was just a pass-through entity. A middleman.
Right. If you pull up your brokerage app right now, go ahead, open it up, and type in the ticker LEU. You will see a company called Centrus Energy. You glance at the summary, and it says nuclear fuel supplier. You look at the chart, and historically, it moves like a utility stock. Slow, plodding, maybe a little cyclical.
Yeah, nothing exciting.
You might think, okay, maybe a safe dividend play, maybe a place to park some cash. And then you'd probably close the app and move on to something more exciting like NVIDIA.
And that would be a massive mistake. Because if you treat Centrus Energy like a standard utility play, you are missing the entire story.
You are missing the thriller movie hiding inside the balance sheet.
I like
Because we are not talking about a company that just sells fuel. We are talking about a company that is currently the protagonist in a geopolitical drama involving the White House, the Kremlin, the U.S. Navy, and a $2 billion secret that just landed in their bank account.
It sounds like hyperbole, but it really isn't. This is a company with a massive identity crisis, but it's the kind of identity crisis that makes investors very, very rich if it resolves the right way.
Let's set the stage here. We are looking at a company that is currently a middleman for Russian uranium. That is their business. They buy from Russia, they sell to the U.S.
For now.
For now. But they are trying to pivot, and pivot is putting it lightly, to becoming the only domestic manufacturer of the fuel needed for the U.S. military and the next generation of nuclear reactors.
It is a reframe. You have to stop looking at this as a utility stock.
Yeah.
You have to look at this as a sovereign security play disguised as a utility stock.
A sovereign security play.
The United States has a massive hole in its energy independence, specifically regarding enriched uranium. Centrus is the plug for that hole.
And the stakes couldn't be higher. We are talking about a company that is currently keeping the lights on by buying from the very country the U.S. is trying to cut off Russia,
Right.
while simultaneously building the factory that will allow us to tell Russia to take a hike. It's a race against the clock.
It really is. They have waivers to keep importing Russian fuel until 2027. That is the ticking clock. By 2027, the bridge burns down. They need to have their own house in order, or at least the foundation poured by then. And what we saw in the Q4 2025 earnings is that they are preparing for war, financial war, industrial war.
How so?
They have built a war chest of nearly $2 billion in unrestricted cash.
That number just blows my mind. We're going to spend a lot of time on that number today. $2 billion.
It's staggering.
For a company of this size, having $2 billion in cash sitting there, it changes the whole thesis. It's not just cash on hand, it's a weapon.
It's a fortress. It's a guarantee.
So the mission for this deep dive is pretty clear. We need to figure out, can Centrus pull this off? Can they transition from a low-margin broker, basically a drop shipper for nuclear fuel, into a high-margin, high-tech manufacturer before the clock runs out?
That is the question. And to answer it, we have to look at the three pillars of this story. The status quo, which is the brokerage business, the pivot, which is the technology and the government backing, and the financials, specifically that war chest.
Let's start with section 1, the status quo, the cash cow, because I think it's crucial for everyone listening to understand how Centrus makes money today, right now, as we speak, because they aren't making the fuel yet, are they?
No, they are not. Not for their commercial revenue.
Yeah.
If you look at the 2025 full-year numbers, the vast majority of their money comes from what they call the LEU segment, low-enriched uranium.
And what are the numbers there? Just how big is this segment for them?
In 2025, the LEU segment accounted for roughly 77% of their total revenue, We're talking about $346.2 million out of their total top line.
77%. So really, 3/4 of the entire company right now is just this brokerage business.
This is the engine that drives the car right now, no question.
Okay, so 77% of the business is this LEU segment. But you called it a brokerage model. Explain that. What are they actually doing? Are they mining anything? Are they refining anything?
Nothing. It's essentially arbitrage. Centrus has long-term supply contracts with major global enrichers. The two biggest players they deal with are Tenex and Urano. Urano is the French state-backed nuclear giant. Very reliable, very Western.
A friendly supplier.
A very friendly supplier. Tenex, however, is the Russian state-owned nuclear energy corporation.
Ah, okay. The not-so-friendly supplier, at least geopolitically.
To put it mildly. So in simple terms, Centrus places an order with Russia or France, buys the fuel, marks it up, and sells it to a utility company in, say, South Carolina or Pennsylvania.
Exactly. They buy the SW separative work units, which is the service of enriching the uranium and the physical feed materials.
SW. Okay. They package it, figuratively speaking, and resell it to utilities in the U.S., Asia, and Europe. They are a middleman. They're the ticket master of uranium.
Ticket master for uranium. I love that.
They don't put on the show. They just sell you the way in.
And is it a good business? I mean, Ticketmaster seems to do pretty well for itself.
It is profitable. In 2025, the gross profit from this segment was $111.5 million.
Yeah.
So the margins are decent.
Okay, $100 million in profit. That's real money.
It is. It generates the cash flow that pays the salaries, keeps the lights on at headquarters in Bethesda, and keeps the stock listed. But, and this is the critical part, it is a precarious profit.
Precarious because of the supplier.
Precarious because it relies on geopolitical stability in a world that is fundamentally unstable. When your primary supplier is Russia, you are sleeping with one eye open.
That brings us to the Russian elephant in the room. This is the part that I think is so confusing for people. We know there's a ban. The Prohibiting Russian Uranium Imports Act was signed into law in May 2024.
That's right.
It was a huge headline, U.S. bans Russian uranium. So if there is a ban, how on earth is Centrus reporting hundreds of millions of dollars in revenue from selling Russian stuff in 2025? It feels like a contradiction.
It does, and this is where physics collides with politics. The politics say ban Russian uranium. The physics say Russia holds about 44% of the global enrichment capacity.
44%, almost half of the world's supply.
Almost half. You cannot just turn that off with a signature on a piece of paper. If we cut off Russian supply instantly, U.S. nuclear reactors, which provide about 20% of our grid's power, would eventually run out of fuel.
So brownouts, blackouts.
Prices would skyrocket, lights would go out. It would be a national crisis.
So the government had to build a bridge, an off-ramp.
Exactly. The legislation included a waiver system. The Secretary of Energy has the authority to grant waivers allowing the import of Russian uranium through 2027 if there is no alternative supply available.
If there's no alternative.
And since there is no alternative supply available at that scale, Centrus got the waivers. They are allowed to fulfill their existing contracts.
So they have a permission slip. You can trade with the enemy until 2027 because we need the electricity.
That is the deal. That's exactly it. But just because you have a permission slip doesn't mean the process is easy.
Right.
And we saw a perfect painful example of this in the Q4 2025 earnings report.
Oh, the miss. I read about this. They missed their revenue targets for the quarter.
They did.
And usually when a company misses revenue, you think, uh-oh, demand is drying up, customers aren't buying. But that wasn't the case here, was it?
Not at all.
Yeah.
Demand is robust. Every utility wants fuel. The problem was logistics. And this story really highlights how fragile this brokerage model is.
Walk us through what happened.
So Centrus had a shipment of low-enriched uranium scheduled to arrive from Russia in the fourth quarter. This revenue was baked into their guidance.
Okay.
They expected it to land, get transferred to the customer, and the cash register would ring before December 31st. A standard transaction.
Seems simple enough.
But getting nuclear fuel out of Russia right now is not like shipping a box from Amazon. It has to travel by rail from the Russian facility to a port, likely St. Petersburg. Then it has to be loaded onto a specialized vessel. Then it has to cross the Atlantic.
And I assume there aren't many shipping companies raising their hands to carry Russian cargo these days.
Correct. I mean, think about it. There are sanctions on Russian shipping companies. There are sanctions on insurance for Russian vessels. The pool of available ships that can legally and safely transport this material is tiny.
So it's a bottleneck.
It's a huge bottleneck. And in Q4, the vessel that was supposed to carry this shipment wasn't available.
It wasn't there.
It wasn't there. or there was a delay in securing a replacement vessel that wouldn't violate some other layer of international sanctions. So the shipment got delayed. It didn't arrive in 2025.
Wow.
It slipped into early 2026.
So the revenue isn't lost, it's just delayed. It moves into the next quarter.
Right. They will book that revenue in Q1 2026. But think about what that means for the business model. You have the customer, you have the contract, you have the U.S. government waiver, but because a boat wasn't available in Russia, you missed your quarter.
Your stock price takes a hit.
Exactly. You are completely at the mercy of a supply chain you do not control.
That is a terrifying position for a CEO. If I'm Amir Vexler, the CEO of Centrus, I'm looking at that situation and thinking, we cannot live like this. This isn't sustainable.
And that is exactly what they are thinking. That logistics glitch is the perfect argument for why the pivot is necessary. The brokerage model is the cash cow, but the cow is getting old and the fence around the pasture is burning down. They have to move.
Which leads us perfectly into Section 2, the strategic inflection point, the pivot. Why now? Why build a factory?
Well, the why now is obvious. The waivers expire in 2027. The Russian ban runs until 2040.
Until 2040, wow.
If Centrus doesn't have a new source of fuel by 2028, they have nothing to sell. They go out of business.
So it's existential.
It is purely existential. But there is another layer to this pivot that makes it much more interesting than just a company trying to survive. It's about the fact that the United States has zero domestic capacity for national security enrichment.
Zero. We have the biggest military in the world. We have nuclear submarines. We have aircraft carriers. We have thousands of nuclear warheads. Where does the fuel come from?
It's a great question. And it's a shocking answer for most people. Historically, it came from a place called the Paducah Gaseous Diffusion Plant in Kentucky.
Paducah.
It was this massive, sprawling facility built during the Cold War. It used an incredible amount of electricity, but it churned out enriched uranium for decades.
And what happened to Paducah?
It shut down in 2013. It was too old, too inefficient, and too expensive to run compared to modern centrifuge technology. So the U.S. shut it down.
So for the last 12 or 13 years,
Yeah.
what have we been doing?
For the last 12 years, we have been living off stockpiles. We are burning through the Cold War leftovers. We have been blending down high-enriched uranium to make fuel for the naval reactors. But those stockpiles are not infinite.
Okay, that's alarming. But why can't we just buy fuel from our allies? The French are our friends. The British have enrichment capabilities. There's a big plant in New Mexico, right?
Yeah.
Urenco. Why can't we just put French uranium in a U.S. submarine?
Because of treaties. This is where the international law comes in. Most enrichment technology in the world is covered by non-proliferation agreements.
Non-proliferation, okay.
If we use French technology, or even Urenco technology, which is a consortium of British, Dutch, and German partners operating in New Mexico, we are bound by agreements that say that technology can only be used for peaceful civilian purposes.
Peaceful purposes.
Yeah.
Meaning light bulbs and toasters, not torpedoes.
Exactly. You cannot use foreign obligated technology to produce tritium for nuclear warheads. You cannot use it to fuel a Virginia-class submarine. It is legally forbidden.
So we tied our own hands, we shut down our only domestic plant, and we signed treaties saying we wouldn't use foreign tech for defense.
Correct. Which brings us to Centrus. Centrus owns the AC-100M centrifuge technology. It was developed here in the United States in partnership with the Department of Energy.
Homegrown tech.
It is American technology.
Yeah.
It is not subject to those foreign peaceful use restrictions.
So Centrus is the only game in town.
They are the only deployment-ready U.S. technology that meets national security requirements. If the U.S. Navy wants to keep sailing in the 2030s and 2040s, they effectively must buy from Centrus.
That is what investors call a moat. A legal, geopolitical, technological moat.
It's a monopoly mandated by necessity. And the government acknowledges this. In Q4 2025, the National Nuclear Security Administration, or NNSA,
The NNSA, right.
the people responsible for the nuclear stockpile, notified Centrus of their intent to sole source enrichment activities.
Sole source. I know that term from government contracting. It means we aren't even going to pretend to look for another bidder.
Exactly. It means you are the only one who can do this, so we are going to write the contract directly to you.
Wow.
This effectively creates a guaranteed customer base for the factory before it is even fully built. It provides a floor for the business that is backed by the U.S. defense budget.
So that's the defense side. That's the keep the lights on side for the military.
Right.
But the growth story, the thing that gets people excited about 10x returns, is the commercial side, the next generation of reactors. Let's move to Section 3. The technology. We keep seeing this acronym. HALEU, HALEU.
HAEU. It's the buzzword of the nuclear industry right now.
What is the difference between the stuff they broker now, LEU, and this new stuff, HLEU?
Think of it in terms of octane ratings at a gas station, or maybe proof in alcohol. Natural uranium coming out of the ground is mostly U-238. It has a tiny fraction, about 0.7% of U-235.
U-235.
U-235 is the isotope that splits. It's the bang part of the fuel. It's fissile.
The spicy part.
The spicy part. To make fuel for a standard nuclear reactor, the big concrete domes we have today, you have to enrich that uranium. You spin it in centrifuges to concentrate the U-235 up to about 3% to 5%.
Okay.
That is low-enriched uranium, or LEU. That's regular unleaded.
Okay. Regular unleaded, 5%. Got it.
HALEU stands for high-assay low-enriched uranium. It is enriched further up to just below 20%, usually 19.75%.
That's a big jump, from 5% to almost 20%.
It is huge. It's high-performance racing fuel. And why do we need racing fuel? Because the new engines demand it.
The new engines being the next-gen reactors.
Exactly. The advanced reactors being designed by companies like TerraPower, Bill Gates' company, X Energy, Westinghouse's eVinci microreactor.
Yeah.
These machines are not like the old reactors.
How are they different?
They're smaller, they're safer, some of them are portable. And to achieve that performance, that higher efficiency in a smaller package, they need the higher energy density of HLEU.
So if you want the future of nuclear energy, small modular reactors, SMRs, microreactors for data centers, you need HALEU.
You cannot run those engines on the old fuel. It's physics. And here's the kicker. 9 out of 10 advanced reactor designs selected by the Department of Energy for funding require HLEU.
9 out of 10, so the entire next-gen industry is betting on this fuel.
The whole roadmap depends on it.
Who makes it?
Right now, commercially, Russia.
Of course, it always comes back to Russia.
Russia is the only commercial supplier of HLEU in the world. So the U.S. advanced nuclear industry has been in a state of paralysis.
A chicken and egg problem.
A huge chicken and egg problem. They have these great designs, but they can't build the reactors because they can't get the fuel, especially now with the ban. They need a domestic source.
And Centrus is stepping up.
Centrus is currently the only company with a license from the Nuclear Regulatory Commission, the NRC, to produce HLEU in the United States.
The only one with a license.
That license is gold. It takes years and millions of dollars to get through the NRC process. Centrus is already on the other side.
But do they have a factory? Or is it just a license and a piece of land?
It's more than a piece of land. They have a facility in Piketon, Ohio, and inside that facility, they have a demonstration cascade of 16 AC-100M centrifuges.
16 machines? That sounds small for a whole industry.
It is small. A commercial plant would have hundreds or thousands. But these 16 machines are running, they are spinning, and they are producing.
They're actually making HLEU right now.
Yes. In November 2025, Centrus completed Phase 2 of their contract with the DOE. They delivered 900 kilograms of HALEU.
900 kilograms? That's nearly a metric ton. That's real product.
It is. It's proof of concept. It proves the technology works. It proves they can handle the material safely, and it proves they can deliver to the government.
So the science experiment worked.
The science experiment worked. But 900 kilograms isn't a business. It's a science project. The goal is to scale up.
What's the target? What's the next step?
Their immediate goal is a base capacity of 12 metric tons per year.
12 tons. Again, maybe I'm used to hearing about gigatons or megawatts, but 12 tons doesn't sound like a world-dominating number.
It sounds small, but in the HAU market, which is just birthing, it's significant.
Mm-hmm.
And the CEO, Amir Vexler, made a fascinating point about this specific number.
Okay.
He claims that at the 12 metric ton level, Centrus can reach what they call nth of a kind economics.
Nth of a kind. I saw that in the transcript. Unpack that for us.
It's an engineering concept. The first of a kind factory is always a disaster financially.
Right. You're figuring everything out for the first time.
You are learning as you go. You are making mistakes. Everything costs double. You usually only get efficient when you build the nth one, the 10th or 20th.
Okay, so practice makes perfect.
Exactly. Vexler's arguing that because their centrifuges are modular, you just link them together like Lego blocks, they don't need a massive, sprawling gigafactory to be profitable. They can achieve manufacturing efficiency and profitability at a relatively small scale, that 12 metric ton mark.
That is a huge advantage, if true. It means they don't have to burn cash for 10 years waiting to get big enough to break even.
The claim.
They can get profitable on a smaller footprint.
Exactly. It lowers the barrier to entry for themselves. They can crawl, then walk, then run, rather than trying to sprint immediately.
But even crawling costs money in the nuclear world. A lot of money.
Oh, yes.
And that brings us to Section 4. The financial fortress. The war chest. This is where the story gets really wild.
The balance sheet transformation here is one for the textbooks.
Let's look at the numbers. At the end of 2024, Centrus had $671 million in cash. That's a respectable amount.
Very respectable for a company that size.
But when we got the Q4 2025 update, that number had exploded.
It nearly tripled. They ended 2025 with $1.96 billion in unrestricted cash.
$1.96 billion, let's just say $2 billion. How did they do that? They didn't make $1 billion in profit from selling Russian uranium.
No, the operations didn't generate that cash. The capital markets did. They sold paper.
What kind of paper?
They raised $782 million through convertible notes and another $523 million through at-the-market, or ATM, stock issuances.
Okay, let's pause there. At the market issuance, that means they were printing new shares and selling them into the stock market day by day, right?
Correct. It's a slow, steady trickle of new shares into the market.
Usually investors hate that. It's dilution. It means my slice of the pie is getting smaller.
It does.
Usually when a company announces huge dilution, the stock tanks. But Centrus stock, it held up. Why?
Because the investors understood the assignment. They looked at the opportunity, the monopoly on HALEU, the defense contracts, and they realized that for Centrus to capture that prize, they needed capital.
They needed the bullets for the gun.
They needed a war chest. Investors were willing to be diluted in the short term to fund the massive growth in the long term. It was a trade-off they were willing to make.
But why $2 billion? Why not just raise $500 million to get started? Why hoard that much cash? It seems like overkill.
It's all about control. The CFO, Todd Tonelli, was very explicit about this on the earnings call. He said this liquidity ensures they can build out the Piketon facility regardless of market conditions.
Regardless of market conditions, that is a powerful phrase.
It is. Think about the macro environment. Interest rates go up and down. Banks get skittish about nuclear power because of the perceived risks.
Sure.
Political winds change. If you are building a factory that takes 3 or 4 years to complete, you do not want to be halfway through pouring concrete and have your bank credit line cut off because the market crashed.
So they effectively pre-funded the entire project. They took all the financing risks off the table.
Exactly. They're saying, we have the money in the bank. We don't need to ask anyone for permission. We don't need to beg for a loan. We are building this machine. It removes the financing risk from the equation entirely.
And they are going to spend it fast, aren't they?
Oh, they are going to burn it. The guidance for 2026 is what we call a build year.
A build year.
They are projecting revenue to be flat, roughly $425 million to $475 million. That's basically the brokerage business hunting along. But capital spending.
How much?
They are planning to spend between $350 million and $500 million in 2026 alone.
Wow. So they might spend more on the factory than they bring in from revenue.
Yes. They are buying steel, they are buying centrifuges, they are paying contractors. 2026 is not about generating profit. It is about building the engine.
Okay, so investors need to understand that.
If you are an investor looking for a quick earnings pop in Q1 or Q2 of 2026, you're in the wrong stock. This is a construction site.
But here's the thing that makes me feel better about that spending. They aren't the only ones paying for it. Uncle Sam is chipping in. And by chipping in, I mean writing a massive check. Section 5. Government backing.
This is the catalyst. We talked about the waivers, which are policy support. But in January 2026, we got financial support. The Department of Energy selected Centrus for a $900 million task order.
$900 million. That is nearly half the size of their own cash pile.
It is. And this isn't a loan. This isn't an investment they have to pay back with interest. This is a task order.
What's the difference?
A task order means the government is hiring them to do a job. In this case, the job is expanding Piketon for commercial HALEU production.
That distinction is huge. The government is underrating the restart of the American uranium industry.
They are. They realized that the private market was moving too slowly. The chicken and egg problem was too strong.
Right. The paralysis we talked about.
Utilities wouldn't buy reactors without fuel, and fuel makers wouldn't build factories without reactors. So the government stepped in and said, we will break the deadlock. We will pay for the factory.
And the award includes options to buy the fuel too, right? It's not just for construction.
Yes. It includes options for the DOE to purchase up to $170 million of the HALEU produced.
So Centrus gets money to build the house and a signed lease from a tenant before the house is even finished.
That is the ultimate de-risking. You couldn't write a better script for the company.
But speaking of risks, we have to address the elephant in the construction room. Nuclear projects are notorious for being disasters.
Oh, absolutely.
I'm thinking of the Vaughtal plant in Georgia, billions over budget, years late. Why should we believe Centrus, a company that has mostly been a broker, can build a complex nuclear facility on time and on budget?
That is the single biggest risk. Can they actually build it? And Centrus knows they aren't a construction company. They are scientists and operators.
So what do they do about it?
That is why the announcement in February 2026 was so critical. They signed Fluor as their EPC partner.
Fluor, I know that name. They are one of the giants.
They are massive. EPC stands for engineering, procurement, and construction. Fluor has built refineries, power plants, and chemical facilities all over the world. They know how to manage massive, complex projects.
So they brought in the pros.
By bringing them in, Centrus is grown-upifying the project.
Grown-upifying.
Yeah.
I like that.
They aren't trying to manage a billion-dollar construction site with a clipboard and a prayer. They hired the pros. Fluor brings supply chain management, project controls, labor management, all the boring stuff that makes the difference between a project finishing on time or finishing 5 years late.
It comforts investors. It says, okay, this isn't a science project anymore. This is an infrastructure project.
Precisely. It doesn't eliminate the risk weather happens, steel shortages happen, but it professionalizes the execution.
So we have the cash, we have the government money, we have the contractor. It all sounds incredibly bullish. But this is Griffonomics, and we have to look at the other side of a coin. Section 6, the risks. Because when I look at the valuation of the stock, my nose starts to bleed a little bit.
It is nosebleed territory. The stock is trading at a price-to-earnings, or PE ratio, of around 70x.
70 times earnings? For a utility supplier, that is pricing reserved for NVIDIA or high-flying software companies. Why is the market paying 70x for a company that moves uranium?
Because the market isn't pricing in the broker. If you value them based on the current earnings from selling Russian fuel, the stock makes no sense. It is wildly overvalued.
Okay.
But the market is pricing in the monopoly.
They are paying for scarcity.
They are paying for strategic scarcity. Investors are betting that in 2029, when those machines turn on, Centrus will be the only water vendor in the desert.
And they'll be able to charge whatever they want.
They will have pricing power that makes 70x look cheap in retrospect. But that is a bet. It is not a guarantee.
And there is another number that I think confuses people, the backlog. I see headlines saying Centrus has a $3.8 billion order backlog.
It's a huge number.
That sounds amazing. Guaranteed revenue for decades. But we need to read the fine print.
Always read the fine print. Of that $3.8 billion backlog, about $2.3 billion is classified as contingent.
Contingent. That's lawyer speak for maybe.
Basically, it means customers have signed contracts saying, we will buy this fuel from you if you build the factory and if you secure the financing.
So it's theoretical revenue. It's a pile of letters of intent, not firm orders.
It was theoretical. But this is where the war chest changes the narrative again. A year ago, that contingency was a huge red flag.
Right.
Investors asked, can they even get the money to build the plant? Now that they have $2 billion in the bank, the financing contingency is largely solved.
So the risk has shifted. It's no longer can they afford it, it's can they execute.
Exactly. The risk is now purely execution. Everything hinges on 2029.
2029. That is the magic year.
That is the operational timeline for the first commercial cascade. If the machines turn on in 2029, the contingent backlog becomes real revenue. The cash flow explodes. The 70x PE justifies itself.
But if they miss?
But if they run into delays, if the centrifuges wobble, if Fluor hits a snag, if the NRC demands a design change, and 2029 becomes 2030 or 2031,
then you are in trouble.
then you are burning cash that whole time without the new revenue kicking in. That burns to the war chest. It disappoints the market. And that 70x multiple will collapse very quickly.
And in the meantime, investors are holding a stock that isn't really growing its top line in 2026 or 2027.
Correct. Revenue will be flat. This requires patience. This is not a beat and raise quarterly story. This is a watch the construction cam story. You are investing in a timeline, not a trend line.
What about political risk? We have the NSA intent, we have the DOE award, but administrations change. Could a new president come in and say, actually, we love Russia now, let's just buy their cheap uranium?
It is possible, but I view it as unlikely. National security usually transcends partisanship. Both Democrats and Republicans want domestic fuel for submarines.
It's a defense issue, first and foremost.
It is. Both sides are generally suspicious of relying on Russia for critical infrastructure. So the defense floor of the NNSA business is solid. The commercial ceiling might fluctuate with energy policy, but the core thesis is fairly insulated from standard political bickering.
So let's try to land this plane. We have a lot of moving parts here. Let's go to Section 7, the verdict. How do we categorize this investment?
We rate it as a binary high conviction play.
Binary, meaning it's a 1 or a 0. It works or it doesn't.
Essentially, it's an asymmetric bet. The downside is you lose money, but the upside could be many multiples of the current price.
Summarize the bull case for us. The dream scenario.
The bull case is the sovereign blueprint. Russia is permanently exiled from the Western supply chain. The U.S. must have domestic fuel for both power and defense.
Must have. Not nice to have.
Not nice to have. Centrus is the only option. They use their war chest and the DOE money to build Piketon on time. The machines turn on in 2029. They lock in that $2.3 billion backlog. The NNSA gives them huge long-term defense contracts. Centrus becomes the cornerstone of the U.S. energy grid for the next 50 years.
And the bear case. The nightmare scenario.
The bear case is execution failure, construction delays mount, costs overrun the $2 billion war chest, nuclear projects love to go over budget. Maybe the technology has hiccups at commercial scale.
Right.
Meanwhile, maybe competitors emerge. Orano decides to build a huge plant in Tennessee, or a startup like Silex cracks the code on laser enrichment. Investors look at the 70x PE, realize the growth is years away, and they dump the stock.
It's a classic risk versus reward. But given the government backing, it feels like the floor is higher than a typical startup.
I agree. The government needs this to work. They won't let it fail easily. That is why we rate it a tactical BUY long-term hold.
So not a trade.
This isn't the stock you buy to trade the swings next week. You buy this, you tuck it away, and you don't check the price every day. You watch the construction updates.
Before we sign off, I want to throw one last thought out there, a provocative thought for the listener to chew on.
Go for it.
We've been focused entirely on the U.S. shortage, filling the hole in America, but the whole Western world relied on Russia, Europe, Japan, South Korea. They are all scrambling for non-Russian HALEU.
That is a very big market, much better than just the U.S.
If Centrus succeeds, if Piketon becomes this humming hub of enrichment, could Ohio become the energy capital of the Western Alliance?
I think that is the blue sky scenario. That's the 10x or 20x return scenario.
Could we see Centrus exporting American-made nuclear fuel to France, to Japan, to South Korea, replacing the grip Russia held for decades?
It is entirely possible.
Good.
If the U.S. technology proves superior and secure, and if they can scale past that 12 tons to, say, 50 or 100 tons, the export market is vastly larger than just the domestic market. We could be seeing the birth of an energy export giant, not just a domestic supplier. We could see the U.S. regain the dominance in the nuclear fuel cycle that it lost in the 1980s.
From a boring utility broker to an energy export giant, that is quite the journey.
It's the pivot of the decade, if they can pull it off.
If. That is the key word. Well, that's all we have time for on this deep dive. We've untacked the billions, the ban, and the big bet on Ohio.
It's going to be a fascinating few years to watch.
Thanks for joining us on Griffonomics. Remember, risk defined, portfolio protected. We'll see you on the next deep dive.